Composite index rose 1.2% to around 1,944 points week on week, with a steady upcline on a daily basis, while it's up 62.1% year to date. I'm now being joined by Mr. Collins Appiah, Executive Director at NDK Asset Management. Thank you so much, Collins, for joining us.
Thank you.
Now, we've seen the market up week on week in the last couple of sessions. For you, what would you say have been the key drivers?
I think last week, when you look at the stock that went up, you could see that it's really due to the financial sector. The financial stocks over the years have been recording an impressive performance. There are high indication that the second quarter report that they are going to release are going to be very good, and that's why probably I think that investors are taking advantage of taking a position now. Having said that, you also have seen some of the other sectors like the farm milk and gold, the petroleum sector, also doing quite well. We believe that this trend is likely to continue going forward for some time till maybe things change in the economy before maybe a shedding of some of these prices could happen.
Now, apart from the financial services sector, what are the sectors you think investors can position themselves for the new week?
I think going forward, as I said, now my take on any industry will probably be the petroleum. If you look at gold, as I mentioned, after we invested from that stock from IPO, almost about 220 Ghana cedi press worth, you realize that most of these investors have made quite a long gain from that stock, and therefore, when I think about a month or so, the fact started coming down. It makes good sense for those who are not having the stock at this time to really fix in, because now a stock that have jumped to almost 1.48 Ghana cedi before, there's a likelihood that the price will still get to that level. So now that the price is falling below 1 cedi, I think that investors who are probably not taking advantage of that stock should probably look at it. My intake, as I said, will still be on the petroleum sector when you take gold and maybe Total Ghana Limited.
Okay, let's talk about.
I also see farm milk also coming out with an impressive performance, and therefore it will also support its performance going forward.
Okay, let's talk about Standard Chartered. Its results released last week. We saw earnings per share down over 300%. Is the market still reacting to this?
Yeah, I think when you take a next pressure that was dropped over the period that they issued. Now, some of we who trade in some of this stock have seen what Standard is capable of doing. So at the moment, you could see that there is a slight drop in this earnings per share. Having said that, people are just casting their way that this is a stock that has all the time been declaring a good dividend. Anytime they declare a dividend to shareholders are really happy. And therefore, they think that this is just a short-term issue that the company has got. But in the long run, we still see Standard to be a very good financial stock to hold. So I really don't see investors really taking a bad decision against that stock. But as I said, looking at where you stand, if you've made some profit, maybe it's better or necessary to take some of your money out.
Okay, finally, to what extent is the macroeconomic environment impacting on sentiment at the equities market? We saw the MPC last week or so talking, of course, living rates unchanged at 16%. There's still pressure on the Ghanaian cedi, and of course, fiscal authorities still waiting for the proceeds of the Eurobond. For those that, for stocks that are directly tied, or growth stocks as they're called, directly tied to the economy, has there been any impact?
Surprisingly, some of us were actually expecting that, looking at what is happening in terms of the budget deficit and so on, government spending and high interest rate, we were expecting even a negative impact on our stock market. But surprisingly, we see a positive trend rather on our market. Normally, in the previous years, anytime you have such indication, you realize that the stock market will be moving to a nosedive. But this time around, and I believe that, as I said, it probably could be due to the pension fund that is also available, and therefore these pension fund managers have not got any better alternative, and therefore they still have to buy stock to hold. That's why maybe the stock. But I think that what is happening on the general economy in terms of its impact on the stock market is really not having a serious impact because there's still excess of funds, surplus of funds from this pension industry that is still pushing price up. But I believe that if that indicator is not there, then probably you could see a negative impact because anytime interest rates are high, people prefer to hold fixed income. People prefer to hold treasury bills. Treasury bills is now running around 23, 22%. I mean, and that's a retreat interest. So I feel baffles me why people are still, investing in stock and not probably not moving most of their portfolio from the stock to the money market. But as I said, one of our reasons that we expect is probably because of this pension, there's a surplus of funds from investors, and therefore, so far as that it provides them an alternative to diversify their portfolio, then it still makes sense for them to still go in for stocks.